Ms. Ho, thank you very much for accepting CGTN's interview. As we know, this year China has become the world's fifth largest fund hub. What's the major reason behind this?
Thank you for having me today. It is encouraging to see China has taken up the fifth position among the global players. When we look at the history of mutual fund industry in China, it is still very young, with over 30 years of history. Okay, it is a very tough and challenging first half of the year. Global investment fund net assets decreased to 51 trillion US dollar at the end of first quarter. This represents a 13% decrease in terms of the overall industry. This was due to both the market volatility and then the redemption from the investor because they worry about the economic situation. Globally, we have seen investors sold out across all asset classes at the height in March and piled into money market funds. However, what is interesting is China and more broadly Asia are going to be at advantage in terms of the business and economic activity outlook. When we look at the first half of the year, the mutual fund IPO launches, as of end of June, there were 650 new IPOs in the market, raising close to 1 trillion RMB. There were only 2 other years, year 2015 and year 2019, record 1 trillion inflow to the market. But considering this is just the first 6 months and going through the COVID situation, China market is definitely doing very well against our peers. We all know that China presents a significant growth potential as one of the fastest mutual fund markets in the world, with more than 10% annual growth rate. From a structural perspective, the mutual fund industry has definitely benefited from the economic growth, emergence of middle class, aging population, and consumption-led reform. All this has increased the need for proper investment and retirement solutions. From a regulatory perspective, asset management industry is urged to go back to basic. The China new asset management rules announced in year 2018 include the reform of banks' wealth management product, from a guarantee-like return to more net asset value NAV base. This has helped to develop a more realistic expectation between risk and return when it comes to investing. Therefore, it is likely to drive major outflow of banks' wealth management products to more into NAV-based product going forward. This structural change of mutual fund market is happening. Again, when we look at the first 6 months, we can see the outflow of the money market funds given the very low interest rate environment. Investor need in terms of searching for income and yield becoming even more important. That's why leading to them revisiting their investment strategies. Against this backdrop, we believe China will continue to be an important mutual fund market in the world.
And what kind of opportunities have you seen from China's financial reforms? What's your current plan right now?
So we think this is a precedent moment for global asset managers. The progressive reform and the opening up of China financial market allows foreign global asset managers like Fidelity International to fully enter into the market. With our long-term commitment, we are well positioned to embrace the exciting opportunities in China financial market. Fidelity International has already entered into China onshore market as the first global asset manager to register with the Asset Management Association China, AMAC, as private fund management company in January 2017. With our learnings and our experience on private funds, we are also very excited with our recent application of the mutual fund license in May. Obtaining this license will allow us to manufacture and develop onshore domestic product for local investors. When it comes to pension, it is very close to our heart, and this is our DNA. With our deep experience globally on pension, we would like to contribute to the reform of the pension system in China, and more importantly, the development of the third pillar system in the increase in foreign participation and institutional participation, as well as for the sticky reform in terms of pension money, will definitely benefit the long-term development of China capital markets.
So you still have a very strong confidence in China, right?
Yes. We definitely have a very long-term view and commitment when it comes to our investment and expansion plan in China.
Okay, thank you very much, Ms. Ho. Thank you for your interview.